Hey everybody, welcome back to Ryan Makes Sense. Today we are looking at ticker symbol USIO. This is Usio Inc. This is a payments processor software stock. We'll look at the website, we'll look at the chart, we'll look at the balance sheet, we'll see what institutions and hedge funds are doing, and so many other things. So without further ado, let's jump on in and hit subscribe. Wink, wink. Okay. All right. So this is a little bit different than what I normally do. I've been watching the stock for years. I used to have a position. I think I actually just got on M1 Finance to see if they had it available. They do not. Um, I think this is territorial, or this is a territory for opportunity to add for the long term if you have several years to wait. Let me explain. So, well, I guess I'll get there in a minute. But looking at the bigger picture here, this company goes all the way back to 2000. Right before the dot-com bubble, this went from, gosh, 80, 90, well, let's see, $91 to 425, and then it has just been trading between pennies to $8. So, um, and as we can see, the last few spikes here, it trades on a downtrend. This one was from about 2005 to 2014. And then we had 2016 to 2021. So there's a 5-year gap there. And then now we are a couple years, 2 years into this downtrend. So I think we've got at least 3 to 8 years before we see this potentially get to the eights again, unless there is a substantial change in revenues. So, looking at where the stock is today, the strength is at 41, not really in the bull's favor. Also, not bottom of the barrel. The momentum honestly just looks flat. After having a huge roller coaster up and a huge roller coaster down, it has just been tumbling. It could actually looks like it might be tumbling lower. And I say that because it looks like this black line could be crossing downward. I'm looking at the furthest. So this is the furthest the momentum's ever gone down. It's never gotten that low before, ever since. So this downtrend here is the lowest it has seen since 2008, which is crazy. Money flow is at a 54. It's not all-time low, not all-time high, just kind of hanging out right in the middle, which is fine. Relative momentum indicator, you can actually see this. The indicator long-term is actually going downward. So again, I think we have several years to wait here. If you have several years to wait, I see this as a potential opportunity to slowly add dollar cost average $20 a week into this for the next 2 years. I don't know. I'm just throwing out an example. I'm not putting $20 a week into this. I wish this was on M1 Finance because then it would be automated, emotionless. I don't have to think about it. It does it automatically. However, it is not. So I will just continue to wait on this one as I wait for the apex or opportunity. So again, just neutral overall. They do have earnings later today. I'm just neutral overall. However, we will see volatility to the upside or downside, which we will look at potential price targets on that. Let's run my calculation here. So my calculation again came from when I was working at a microcap firm. Every $100 million in sales was equivalent to $1 in stock. So as you can see, we are at less than 100 million, which puts us at definitely a penny stock. But we also have shares float, which would make this more than $1. So I'll stop talking and we'll get into it. I only count the market cap if it is over 1 billion. Our market cap here is 40 million, which is crazy because our sales are double that. When I say our, I meant the company. Sorry, I'm not affiliated. I don't have any ownership in this. So sales again are 82 million. Everything's in millions, so I'm just gonna do it shorthand. 82.59 million, but they lose 0.48 million. So they are not profitable, barely. They make 82.5 million. However, they lose 480,000. So their profit margin is negative 0.58%, not even 1 whole percent. Gross margin 20%. We want to see that 30, 35, honestly, for a company in this situation. Again, sales, this is beautiful, but however, look, we're only in the millions. Went from 28 to 32, 61, 69, 82 million. They're doing nice steps up. I could see this being a $100 million a year generating business in the next 3 years. Again, that kind of falls in line with what we're waiting for over the next few years. EPS, I think overall is going the right way. We did see a decrease from 39 to 19, down to 2, back to 27, back to 2. So just waiting on this. This company used to be affiliated with the Voyager Digital crypto brokerage that went bust. They were going to issue cards. I was on the list to get a card, never got one. Sad, sad, boo-hoo. So this company is just really, to me, just fine. It's like they're trying to find their footing. I'm just going to open up the website so we can get a feel for the company, but we're just going to let that load in the background. Okay, down to continue our equation. They do have 19, so plus 19 million, 360,000 in cash. Total debt. They have to have debt. Come on. Oh, I'm on the wrong thing. Whoops. We're back to routers. Okay. I did that wrong. We're going to remove this 1936 because I just added it. So minus 19.36. I was looking at total revenue per quarter. I need to be looking at cash. So they actually have plus 7,160,000. All right. Total debt is 720,000, so minus 0.72. All right. Total assets 106 million, total liabilities 91 million. That is dangerously close to underwater. They have a $15 million buffer. They had a $15 million buffer last quarter. They had a $15 million buffer last quarter. They had a $14 million buffer the quarter before that. Quarter before that, they had a $13 million buffer. Before that was 14 million. Before that was 14 million. Before that was 15 million. So they've only got a $15 million buffer between assets and liabilities. This being a microcap company, we definitely want to see that cleaned up. Their debt situation's fine. They just need to take care of their other liabilities because that is not okay, in my opinion. For a company being in a mega growth period where they need to get their poop in a group, come on. They need to reduce their liabilities substantially. Yeah. I mean, I think they are. Like, look, they went from 115 to 91. But at the same time, they went to 130 million to 106 million in assets. So, yeah. So I'm feeling overall neutral, but we'll continue on with this calculation. So now we're going to take this and we're going to divide this by our shares float, which is 15,240,000. So this is a $5 stock trading at $1.51. Price targets, we don't really see any. Target price is $7.50. Again, this company needs to be more efficient. Gross margins, this needs to go up. Profitability needs to happen. Liabilities need to go down. They are paying, look, if you look at their debt to equity and their long-term debt to equity, they are paying their debt down. But again, their liabilities are gross. So that is that part. Your partner in integrated payments. So here's all the different options they have. buy now, pay later. Like this is, they have the medulla oblongata, they have it all under the sun. They just have not hit their stride with partners yet. This could be a million to billion dollar company. They just have not hit it off yet, which again, the risk to reward here, um, they do have some kinks they need to work out. But I think in the long term, if they stop partnering with shady like Voyager Digital, come on, if they can find the right partners and the right synergies, I think this could be like a million to a billion dollar company. Again, like I know people who are, I mean, I don't know people, but when I post this video, people are gonna be like, you never talked about this. You didn't look at their partnership here. You didn't look at the fact that they can do prepaid digital cards within a certain range so that you can only spend that money within a certain area. I get it. This company does not qualify for me to dig farther. This company needs to get their stuff together before I get excited about this. However, in the meantime, I do have time in the market. I do have several decades left. I don't, if I do $20 a week into USIO without thinking about it, so be it. I mean, and then in a few years, coming back and being like, wow, I own 1,000 couple shares. This is cool. Um, so that's where I'm at with this. So institutional ownership, it says, I'm just kind of going from one topic to the other. So far, we've looked at potential stock price. We looked at the website. They literally have every type of payment solution you could want. ACH, card issuing, processing, payment facilitation, text to pay, buy now, pay later. They have it all. Great for them. Now we're looking at institutional ownership. So institutions own 21%. That is old data. New data has this at, gosh, 23%. So a 2% increase. However, it is near all-time institutional hedge fund ownership highs. So this is a good thing. I think institutions are drip investing here, like adding $100 a week. We got the company selling 40 million shares, 43 million shares last November. I don't know why they needed to sell 43 million shares, but whatever. Looking at the month of May, Keepos Capital app opened up a position of 500,000. Dimensional decreased slightly. Wells Fargo, great job. They own 134 shares. That's a smart way to do it. Slowly add shares over time. JP Morgan sold half of their shares, so they must have had 80 shares and they sold half. BlackRock sold 1.1%. Vanguard sold a little bit. Perkins Capital added to their position. Charles Schwab added to their position. Susquehanna International decreased their position by quite a bit. Pro Equities doesn't have any idea what this company is going to do, so they have puts and calls here. It looks like it's less than 1,000 shares. I don't know, but they don't have any idea. Allworth added. Simplex has a hedge. They have puts, but they also have shares long, and they decreased some of their shares. Fidelity added. Investors, Asset Management of Georgia added 20,000 shares. That's decent. If they add 20,000 shares for the next 3 years, I think they might be pleasantly surprised. However, I don't know. Again, you can do this yourself as well. I do think the overall picture we're getting from institutions and hedge funds is nobody really knows what's going to happen, but nobody is going balls to the wall all in saying this is the time. One of the companies that I tend to watch out for is Renaissance Technologies. And Renaissance Technologies does have 385,000 shares as of mid-February. Mid-February, what was the stock price? That's 2023. Mid-February was around here, between 130 and 170. We're at 150. So Renaissance Technologies has always been early to the party. We're now going to look at the long-term chart here because I've charted this one to the bone, I think. All right. Yep. So I've charted this one for a while. Again, I said the next 3 years. We have one to about March of 2026. We should see an apex here where it goes up or down, or it could just reverse here and see again the apex around November of 2025. So again, I think we are going to be in this sideways action for a while. If earnings are really good, we're going to test 228. And you can see we tested 228 once, twice, three, four, five, six, 7 times in the last 2 years. If earnings are horrible, I think we test 120. And I think 120 is a solid price long term. I am going to add to this chart actually. So what I'm going to do here is called a Fibonacci arc. And together we're going to see how well the stock has reacted to this price. As you can see, I have never drawn this before. We're going to go to the lowest of the low, which was 3 cents back in 2011. And we're going to go to the all-time high, which was 862 right here. All right. How well did the stock respect these lines? Let's start over here. You can see this candle tests this outer circle and this mid circle. Perfect resistance. This next candle, this is April 2015, absolutely respects it. This candle right here touches support, touches resistance. These candles here act as resistance, perfect resistance here. Resistance, resistance, resistance. Acts as support, resistance to the mid candle, resistance to the mid candle, resistance to the mid candle. Acts as perfect support to our outer candle. Acts as perfect support, resistance, acts as perfect support, amazingly perfect support, perfect resistance, tests it. Going on through. Right. Resistance, perfect resistance, resistance. I can't tell this one. This one looks like perfect resistance. Comes up. Look at this. Acts as perfect resistance. Comes up. Breaks above here. Acts again as resistance. Support, support, resistance, resistance. Tries to break above. Resistance again. And now, whoops. We are on the second half of this bubble right here. Once the stock touches this outer ring right here, this for me would be perfect buying opportunity. I think we could see it test it, maybe come out of it, hopefully follow it. If it doesn't follow it, it's not the end of the world. But I do think once we do break out in this area, we could start seeing it test the apex here, and then we get into our 2030s, which is the next market melt up. And if you're wondering why I think that, is because going back to the 1800s, one of my most viewed videos, it should show up here at the end of this video, or if you go to my channel, look at most popular videos, it's my most popular video. It goes back to the 1800s of predicting the market crashes. It had the Great Depression, it had the Great Financial Crisis, the dot-com bubble, the Great Lockdown, the COVID, whatever. And I think we do get back into this $8-9 channel range. My opinion only, but it perfectly goes out of the 2030 level. So just my opinion. Thank you for watching if you made it this far. I like this company long term. I wish I could dollar cost. I might look into interactive brokers because that is my other. I have several. I would like to definitely add to that one on a weekly basis. So If you made it this far, thank you so much for watching. Have a great day. Consider subscribing.